So you want to invest in multifamily real estate? Great to hear. But how do you manage to finance such an expensive asset class? Well, I've been investing in multifamily for the past 20 years, and in this video, I'm going to show you all of the different things and ways to finance your multifamily real estate investments. First, let's talk about conventional mortgage. These are mortgages offered by your traditional banks where they're typically loaning you anywhere from 60 to 80% loan to cost, maybe also, again, historically 100% of renovation proceeds. Prior to this moment in time, you could get 80% loan to cost and 100% of construction proceeds. Normally for us, we would not usually exceed 70 to 75 loan to cost and 100% of loan proceeds. Just gives us a better cushion where now we're getting a loan that's about 75%. We're bringing in the equity for the difference. There are a good plethora of options available there now. That being said, because of the rise in inflation over the last year and short-term interest rates going up, those rates on those conventional type products have gone from maybe 4.5 to 8.5, depending on the condition of the property. Now you get some regional banks, and depending on the property, you can get down to 6.5. But these are great opportunities that still exist even today. Next, let's talk about government-backed loans. Now, there's definitely benefits. And again, multifamily has a unique space because it is a housing need or what we would call a human necessity. Everybody needs a roof over their head. The government recognizes this, so they incentivize by providing government-backed loans. And this is one of the only real commercial asset areas, commercial real estate asset areas, where we have the benefit of this kind of financing. So you have Fannie Mae and Freddie Mac. You also have HUD loans. So let me just talk about each. Fannie Mae typically is, again, historically 70 to 80% loan. They would also offer 5, 7, 12-year fixed interest periods with a 30-year amortization. Also some measure of built-in construction proceeds as well. Freddie Mac, another government-backed agency, would provide a similar 5, 7, 12-year interest fixed period and then a 30-year amortization, no construction proceeds. Also too, some of them you can get affordable housing credit with Fannie Mae where they give you a lower rate bracket because you're providing affordable housing. And then HUD loans go out to 40 years with respect to the length of time there and a lower interest rate as well. So these are tremendous benefits. And then they also offer the ability for a new buyer to take over and assume the loan, which is also a good flexibility. Right now in a higher interest rate environment, that's an attractive feature. If you've got a loan, like right now we have a couple of properties that the loan rate's 3.47%. We could sell it in a marketplace where they could assume the loan at 3.47 compared to today's rate of 5.25, 5.5, and that's an attractive feature that they're willing to pay more for. So a lot of great investment loan options here with the government backing. If you're enjoying this video, make sure give it a like and subscribe to my channel. The next category is commercial loans. So we have CMBS loans as commercial loans put together by brokerage firms or banking syndicates, pooling together capital, and then they sell off those loans in the marketplace. And what it's designed to do is provide for more liquidity in the market to provide more loans. You can also, in today's moment in time, get great structured CMBS loans with fixed rate periods up to 12 years and also 30-year loan amortizations as well. Now again, you also have to be cognizant with respect to what are the prepayment penalties when you go out that far for 12 years. Same thing in the government-backed loan category, because if your business plan is to sell within 3 years, you want to match the debt to the plan. One of my mentors has been in the space for 40 years, and that was, his advice early on was always match the debt to the plan. So take that to heart and make sure you walk with it. Seller financing is another category we look at. Now, people a lot of times don't think about this with respect to a large-scale multifamily investment. But the truth of the matter is there are seller financing options that are available. Not everybody's interested in it. We've never sold any of our properties with seller financing, but I know numerous properties have been brought to me by relationships that we have, and they said, hey, the seller's willing to hold financing and here's the terms that you could look at. Gives you a lot more alternative options and flexibility. Also, one of the things that I want to say with clarity with the various financing, whether it's bank loan, government backed, or CMBS, most of those options are going to be looking at you having a net worth at least equal to the value of the loan they're giving you. Whereas a seller financing option has a little bit more flexibility where they may not be looking at that. So definitely don't pass up that as a category. Lastly, we want to talk about creative financing strategies. And this is where, you enter into purchasing a property. Maybe you're buying a property for $20 million. You don't have a $20 million net worth. You've got to get creative. You've got to start looking at how you could create a joint venture with somebody like myself that has a higher net worth, or you go to higher net worth individual where you can bring them in as a partner, and now you've got the net worth necessary to be able to get the loan. There's other strategies such as a master lease option where you could lease the property from an individual on a master lease and then sublease it to the various tenants. There's the seller financing we already talked about. But again, these are different creative ways to be able to acquire multifamily properties. You could also buy the property from the individual and offer them the opportunity to stay invested in the actual deal for more upside. That's a creative strategy that many people don't even realize exists and gives you a leg up on others to be able to acquire that property. That's all I have for today. And if you're interested in passively investing in multifamily real estate with me, click on the link in the description of this video to join our investor club and be the first to learn about off-market investment opportunities. Thanks for watching. I'll see you in the next video.